Chinonye, glad to have you on the show this morning.
Thank you.
So let's talk the current trade trajectory that we are seeing in the markets and what's influencing investors' appetites and sentiments currently.
Okay, so currently the market has been down for consecutive weeks and it's basically showing investors weak interest in the market. What we're seeing right now is that investors are relying on companies' performance, of which there have not been any strong change. As we've seen, companies have recorded moderate growth. Also, we're having less of short-term investors that we can see right now. Most investors want to come in for the long run, and for most value investors, what they try to do is buy fundamentally good stocks at very fair pricing. So for them, they're not about the short-term gains, but rather getting in at the best spot. And since there are little opportunities for short-term investors to come into play, most of them are staying out of the market and trying to cut their losses as quick as possible. The market right now is not giving any strong upside potential for investors to buy into, and so people are reducing their risk exposures and staying a bit far from the market right now.
And how would you say all of these dynamics are impacting general valuations across the market in order to respond to investors' interests?
Well, right now, general valuations, if you're looking at the PE of the Nigerian market, is quite low compared to other emerging markets, frontier markets. Not to talk about developed economies, our PE is quite low, which is quite attractive. But aside that, we'll notice that regardless of how attractive the valuation of the market right now is, investors are seeking more. They need to be sure that there's a stable environment. So what we see most times is investors only come in when there's a significant company news, like when we saw with Dangote Flour, when the Access and Diamond Bank merger closed. So people are paying particular attention to each stock. But in the general market, they're still very bearish. And right now, we think only a strong change in macroeconomic environment can actually influence the direction of the market. Our macroeconomic reforms are still the same. Fiscal and monetary policies are still the same. GDP and inflation, although they're seeming better, but investors are not reacting to them. So what we're saying now is investors are cutting their risk exposures and staying back.
Now, given how investors, like you said, are responding to waiting on the sidelines for maybe some market trade information that could spur their interest, what would you say have been responsible for the movements that we have been seeing regarding banking stocks especially? You look at the volumes, they are the ones that you look at why the market was down week on week. You see Zenith, you see Guarantee, you look at top traded values and the volumes for the week. You still see Access Bank, you see UBA, you see Zenith and Guarantee. So what's the big deal about the banks at the moment?
Okay, so across every economy, the banks are seen as the ones that fuel the economy. So people look into them. When there's a change in the economy, people say that the banks are always the best to. If there's an adverse effect, the banks have an opportunity to make gain. If the economy is good, the banks have an opportunity. So it's like a safe investment. And because they give a hint to what the general economy looks like, it's the first target for investors. Now, when you look at the Nigerian banking system markets, you will see that the banking stocks, like you said, are the most, investor favored, because these stocks, one is that because there are a lot of investors' attraction to the stock, they offer opportunities for short-term trading, they offer opportunities for upside gains, and also because their fundamentals are quite well-rooted, investors feel like if I'm going to buy into a stock for short-term to time the market, I can also buy into a stock that is fundamentally justified, one that holds value. And even across every market, investors look for this. The banking stocks are always the first choice for every value investor or short-term investor. So it's not strange to see that they always tend to top our
It's always about the banks.
It's always about the banks first. They give us the direction of what you think the economy might be doing. So why not buy into the safest ones first before you...
Safe is the word. Yes. Talking about changes that you mentioned earlier that investors may be waiting to see, talking about the MPC, there have been worries or concerns in some areas from some analysts regarding the nomination again of the CBN governor. Talking about monetary policy might remain the same should he embark on another 5-year tenure if he is appointed by the Senate, and the expansion of development mandate of the CBN regulations might remain the same. Supervision of banks might be lax given that it's just a continuity internal, making it first 10 years that we will see since, is it 1993 now? So are you one of those who share these fears that we might see a lax environment given it's just continuity for another 5 years?
Okay, so for the CBN and the banks, I won't really call it a lax environment. I think what the CBN is trying to do is to take regulatory stance that still give the banks a conducive environment to operate, but yet doesn't let their excesses flow. So when you're trying to manage the situation. You're not hard on, you're not pushing in on them. You're trying to make sure that there's still a good environment. So that's what the CBN is doing with the banks. I can't say it is lax because over time they have put regulations when there's a need to, when there's a significant change. They have made sure that there's a regulation in place to curb the bank's activities. This is the first time we are seeing the re-election of a new CBN governor. And
in a long time.
Yeah, for me, I feel it's quite, would be needed. What we're trying to attain in the economy is stability. So the CBN governor over time has tried to ensure that when it comes to monetary policy, he has tried to ensure that there's a bit of stability. They've said that what they really want to check is inflationary pressures, and that's what is on their list. So over time, a lot of people have other propagandas about his views on foreign exchange.
So we'll just have to wait how the markets will respond to that, if it will. Thank you very much for your time on the show this morning. Chinonye Nnawuihe is a senior analyst at Meristem Securities.